what is Global X? We go by Global X, Global Crossing Airlines. What do we do? Global X is a U.S. flag supplemental and domestic Part 121 operator. It's a bit of a word salad, but this is the FAA certification required for all aircraft carrying more than 35 passengers and weighing more than 300,000 pounds. A 121 operator must have 2 pilots for every flight. It is required for any scheduled or cargo operation. By being a flag operator, we can operate anywhere in the world and as our own airline or for flying for someone else, which is a big market opportunity. Only the largest of airline operators get this level of certification, which once achieved is actually a significant barrier to entry. Today, we operate a fleet of 7 A321 family of aircraft, and we're projected to grow to 50 aircraft by 2025. We are currently traded on the NEO Exchange in Canada and the OTCQB. We reported $33 million in revenue for the first half of 2022, forecast and continue to forecast $90 million in revenue for the full year 2022. We'll be EBITDA positive the year and have a 38% insider ownership with a massive market cap of under $35 million. Global X started in August of 2021. Since then, we've achieved several milestones, expanded the fleet from 1 to 7 aircraft, flown over 5,600 hours for revenue, trained over 38 pilots, and that was through June. That number will be significantly higher through September. We currently have, I think, 46 pilots with 30 in training right now, so that's a rapidly growing group. We acquired key certifications in addition to the 121, being allowed to fly for IATA, added some of the domestic North Atlantic tracks and B-50 waters, and what that basically means, it allows us to fly to more areas. We've also signed an agreement for a fully funded maintenance facility out of Fort Lauderdale Airport. And more recently, we announced an LOI for 200 eVTOL aircraft for Member Air. And yesterday, an LOI for 50 electric-powered passenger aircraft for delivery in 2027. So the question is, what makes us different? How do we differentiate ourselves from other operators, other airlines, and other investments in this space? First off, we are a charter airline, which allows us to minimize 2 key airline risks, which is why we did it. We do not take fuel risk. And as that is priced in to every quote we do with customer, and if we get the price quote wrong, we have a true-up mechanism where we invoice them if the fuel costs actually come in higher than what was bid. We also don't take distribution risk. So what that means is when the aircraft is sold, it's the whole aircraft. So when we hear us talk about our metrics and hear us talking about our growth, we don't talk about what in airlines you'll hear what's called RASM, which is revenue for available seat mile, CASM, cost for available seat mile, and load factor, because those aren't factors in our business model because we sell the whole plane. Those, which is a result, those are simply risks we do not take. So lower risk, the less volatility. We sell to customers who are largely insulated from economic cycles, such as the U.S. government, Department of Defense, which is also U.S. government, but a very different division, college sports teams, and VIP entertainment travel. I'll go into the customer list in a bit, but these are also customers who are going to fly. The game's going to be played. The Department of Defense is going to where the Department of Defense wants to go. So we don't have the same impact as on the macro economy. We also think we're capitalizing on key market trends, including the growth of charter travel and the explosion of e-commerce driving the increased demand for freight. We've also been able to take advantage of the opportunity created by COVID, which has allowed us to acquire aircraft at rates 50% lower than they were pre-COVID. While you hear a lot of demand for aircraft these days, it's mainly the newer aircraft that everyone's looking for, the 1 to 6 years. We target the 12 to 18-year-old aircraft, we've seen the prices drop by as much as 50% from pre-COVID levels, which gives us a cost advantage over everyone else in the space, and we believe gives us a cost advantage going forward for a very, very long time. There are a few things, and we say this, more important for an airline than acquiring the right aircraft for the right mission at the right price. And we believe we have managed to do that. So I mentioned in the previous slide, we're both a passenger and then starting in Q4, a charter cargo operator. By selecting the A320 as our core aircraft, it allows us to use a common pilot pool, a common maintenance platform, and a common operating platform that allows us to maximize not only our efficiency, but allows us to get the scale faster with significantly fewer dollars invested than anyone else in the space. One of the things I'd highlight is year-to-date, inception to date, about $23 million has been invested in the airline. We currently have about 52 million shares outstanding, fully diluted around 70 million. So we've achieved what we're discussing and where we've gotten to with relatively low capital amounts. And that's a direct result of the opportunity that COVID presented and just the way we're managing our cash. So when you talk about cargo, GlobalX has chosen the A321F as our cargo aircraft to underpin our offering. This is a differentiated aircraft. It's relatively new to the cargo space, and we believe it's perfectly suited to replace the very old and very aged 757 fleet. There are currently 360 757s in operation that will almost all be phased out within the next 3 to 5 years. We believe the design of the 321F, which allows it to contain 14 containers in the body and 10 containers in the belly, is perfectly suited for e-commerce traffic and will become the dominant, most sought-after narrow-body freighter in the market. And Global has effectively locked up the next 15. And what you're seeing in freight is there's two ways a plane gets full. It either weighs out, so there's too much weight, or it spaces out because of all the boxes. And with e-commerce, the trend is more towards spacing out. And so the ability to have more containers, which is much more efficient, just makes us a significantly better aircraft for cargo than a 757, which is going away, and the 737, which is the dominant kind of narrow-body operating vehicle. We see as we go forward, the economics on this are incredible. Lufthansa has decided to make this their freighter of choice. Qantas has done it. Japan Airlines has done it. And as we talk to more and more operators in South and Central America, this is the aircraft they want. Unfortunately for them, we have them locked up. So this is basically one of the key differentiators we have in our cargo opportunity. Looking at our current fleet, which is all passenger today, we have 7 aircraft. We expect to be 11 aircraft by the end of the year and 20 aircraft by the end of 2023. And it should be noted, there is a direct correlation between revenue and profit growth and aircraft growth. It's no different than maybe in an oil and gas scenario, which is some of my background, is once you get an aircraft producing, it's like a well producing, you drill another well, it produces, and it kind of stacks on each other. And I think that's the stage we're at as an airline, is adding to the fleet, which is growing the revenue. Speaking of revenue to date, we have established a broad customer base and a diverse contract type to both minimize risk and maximize revenue. We have over 40% of our contracts tied to long-term contracts, 31% tied to repeat business, and this would be, for example, Final Four. We did some Final Four last year. We're going to do all of the Final Four this year. Bowl games, college sports, that's seasonal in the winter. And in the summer, you have tour and travel programs, such as the one we did with TUI last summer, and multiple European operators, which will be operating next summer. Ad hoc, these are one-off flights, and these are also last-minute flights. And one of the reasons you want to keep a certain percentage of ad hoc is the margin of those, due to their near-in nature, tend to be much higher. I would argue it's sort of the equivalent of selling the last 10 seats of an aircraft. They tend to have significantly more margin than the first 20. And then cargo, which we'll be launching in Q4, will represent about 4% of our revenue for 2022, growing significantly in 2023 with the addition of the aircraft. Below is a sample of some of our clients. It's by no means exhaustive, but you can sort of see we cross a pretty broad swath of clients and client types, which is key to our growth. And that goes into the next slide. When it relates to customers, we're very diverse in this area as well, which is key to our long-term success. Looking forward, we have significant work contracted as we've been flying numerous bands in support of their tours, such as Bad Bunny, Coldplay, Lady Gaga, Harry Styles, to name a few. We're also finalizing contracts to fly a significant number of men's college basketball teams and their fans to various events. In addition, we'll finalize our summer 23 flying, which I mentioned earlier, which will be over 2,000 hours in Europe. This is all on top of our steady U.S. government, Cuba, and Dominican Republic flying that we're doing today with our existing fleet. Again, our model is simple. Add more planes, make more money. With each aircraft, we add scale, and with scale comes increased margin. We believe we're in the right market, at the right time, with significant contractor revenue, and a platform capable of growing to 50 aircraft and beyond. To put that in perspective, we are going to generate $90 million in revenue with an average 6.5 aircraft over the course of 2022. Imagine what we could do, what this company, valued at $35 million, could do with 50 aircraft. And with that, that concludes the formal part of the presentation.
Thanks, Ryan. We have several questions that came in Um, I'll start at the bottom. How do you finance the new aircraft? Is it between equity or debt, or how have you been doing it?
So all the aircraft to date have been leased.
Okay.
And one of the reasons we're doing leased is there's an opportunity, never waste a crisis. There are significant assets that are owned by lessors that are either parked or they have no place to go. And we've been using that leverage to drive excellent lease terms. Going forward, we would probably look to do some sort of debt or equity financing. And from that perspective, we think there's some accretive value there to be had. But as a starting point, with the amount of capital we are using, we started with leasing.
Okay. And how should we think about like the unit economics kind of an aircraft?
So it's actually, so there's two different unit economics. There's unit economics for a passenger and there's unit economics for cargo. On a passenger, rough order of magnitude, our target is between 150 and 250,000 of contribution margin to overhead. So I think of everything before our overhead to run the business per tail per month. Cargo is between 400 and 600,000 per tail per month. So if you can sort of add those two together, you kind of get a pretty good estimate of how accretive. And really, when we get to 7 or 8 aircraft, we're covering overhead with that contribution margin as a guide. So as we add aircraft this year and in subsequent months, the conversion of that to EBITDA is extremely high, in the 90s.
Okay. And for the charter flights, do you see yourselves as kind of taking business away from commercial aircraft, or is it just taking business away from other charter aircraft? Is it a combination of both those?
I think you have an interesting dynamic in the U.S. right now. If you are a group of 50 people trying to travel anywhere, good luck. If you don't live in a hub city, it's almost impossible. So there are certain groups that have to get there. Like the football team has to be there for kickoff. The band has got to be there. They are no longer using commercial. We actually, pre-COVID, it was, we were able to, as a charter operator in our management team's previous iterations, demonstrates to schools how they could save money chartering a plane versus flying commercial, just in the thousands of hotel rooms they would save. Because it's if you can have the game on Saturday, get the team there Friday night, have the game Saturday morning, they go straight to the airport after the game Saturday afternoon, they come home, versus commercial, they may have to spend a night in a hotel, they connect 3 different ways. So I think there's a growing awareness that this product exists. There's a growing group that are flying more charter, just because with our cost structure with the aircraft we've acquired, we're competing like dollar for dollar with a commercial flight. And so when you add convenience, flying through the FBO versus the main terminal, all those things, it becomes a very compelling story for passengers.
Mike, did you have any questions that came in?
Yeah, are you operating mainly out of one airport, or how does that work?
So we have kind of 3 crew bases. So we have a crew base in Miami, Atlantic City, and Las Vegas, and actually San Antonio we just opened. And so our aircraft can go wherever the work is. And so we've based aircraft in the Northeast, Miami, and in the out West to minimize the repositioning. But to give you an idea, this year we have operated over 70 out of over 70 airports in 2022 to date. So we go where the customer wants us to go. We put the metal and the people as close to where the customers are to minimize any inefficiencies in the quote. And that's kind of how we operate.
Longer term, what do you see as a split between passenger and cargo?
50-50. Well, it'd be 50-50. It would be 50-50 tails, but probably 60-40 more on the cargo side in profit. The cargo aircraft cost more, but they generate more.
Okay, so we have 2 questions that I think kind of relate to this same thing. Someone says, why is no one else doing what you're doing, and what prevented them to copy you? And the other question related to that is the barrier to entry.
Sure. So this business model is used extensively in Europe. There's 3 major operators in Europe. They all have 60 to 80 tails, Sun Express, SmartLink, SmartWings, and they really cater to the European market, and then they fly in the US, partially in the US. There was 7 people doing this in the probably 2012 to 2017 range. They were consolidated up by a company called iAero with Blackstone. The problem Blackstone has is 30 of their aircraft are very, very old. Only about 10 other aircraft really compete with us. And our aircraft, one, we have no debt, and they have significant debt to deal with. And our aircraft were acquired post-COVID, which means our cost structure is lower. One of the reasons why why the charter market wasn't as big in the US is the lease rates on aircraft got too high. I think with the MAX being shut down and kind of the on fire airline market, lease rates on 12 to 18-year-old aircraft were pushing $200,000 to $250,000 a month. To put in perspective, we're leasing our aircraft between $80,000 and $90,000 a month, which makes the economics of charter significantly better and allows us to compete with commercial.
So most major airlines are talking about issues with personnel. How are you navigating finding pilots as you ramp the business?
Yeah, so we're not immune to personnel. One of the things is we do have a bit of a differentiated offering for pilots. We tend to target more experienced pilots, ones who have worked overseas, because we can offer direct and entry captains. So if you go to work for United and you're 45, it might be 60 before you can become a captain. If you're an experienced captain and you want to be a captain, which most of them do because they make double the money, we can offer direct and entry captain roles. We also have a partnership with a training school here called OSM. We call it DirectX training, where we onboard a lot of FOs. And we basically give them a path to operating a large plane, because pilots like big planes. So when we're competing with the regional carriers, with the small jets and the turboprops, we're not at the bottom of the barrel. We're not at the peak. The majors are at the peak. We're in a middle spot where we can offer a different quality of life and a different structure, which has allowed us to attract quite a few pilots. But it's something we do daily. We have a pilot class starting every 3 weeks, and we're actively recruiting and promoting.
How seasonal is the freight business?
The freight business, it depends on who your customers are. For example, if you're working in South America, it's extremely, the peak season is the flower. It's the Valentine's to Mother's Day season. When you look at some of the package carriers, Christmas is obviously a big peak. But what we found is there's pretty substantial demand year round, and we're not trying to attack it at the margin. We believe we have a differentiated product that is significantly more economic than a 737, is significantly more economic than a 757 to operate. So we won't be the last bucket. We believe we'll be one of the first to get the work. And there is, I think, a need for over 2,000 narrow-body charters over the next 10 to 15 years to meet the demand.
I think you're building a fairly large facility down in Miami,
Correct.
The airport there. Can you tell us a little bit about that?
Yeah, so it's actually Fort Lauderdale Airport. It's a 7-acre facility that will allow us to perform maintenance on up to 3 aircraft at once undercover. It will be the only maintenance facility at Fort Lauderdale that will be able to do that. So we're having conversations with other operators such as JetBlue, Spirit. So if a plane breaks, there's really nowhere for it to go at Fort Lauderdale. We'll be the only one. It allows us to save significant funds when it comes to maintaining our own aircraft. And the 5 parking spots, believe it or not, are quite valuable as well. So it's an 8-acre facility. It's one of the last parcels of land in South Florida available for this kind of development. And we're pretty excited. We're working with Oaktree Capital and their private equity group. And it's a design, build, sale, leaseback.
Another question that came in, how do you think about the cargo freight rates evolving, if or when wide body travel and therefore belly cargo space picks up?
Right. And so, it's obvious that COVID created a massive boom in the freight. And a lot of that really was the wide bodies going from Asia to the US. When you think about the narrow body economics, they're a little different, right? And so one of the things the narrow body is going to facilitate is, instead of everything going into a hub, so say you have the big plane fly into LA, with another, you need a bigger plane to kind of go to the different hub, and then it gets trucked. With the narrow body, what we're seeing is they can go to secondary markets. So you can take that big plane in LA, and the 321 will allow you to go to Kansas and El Paso and Arizona, which are some of the smaller markets. And it's sort of like the role regional jets played when they came out in the US, and what that did for the map. And we're seeing that evolution on the narrow body charters happening significantly. And we're also looking at, for example, when we work in the Colombia with our partner Avianca, they do a wide body aircraft, but there's some routes they don't do because it can't justify a wide body. So they're going to use the narrow body to feed the wide body, and the wide body goes through the trunk route. So we think the rates are strong. We think there's strong demand, and because it's a differentiated product, we're kind of changing the game a bit with these aircraft.
Can you maybe expand a little bit? I know it seems like the moat, at least initially over the next couple of years, is your ability to lock up kind of those A320 aircraft over the next 15 or so.
Sure.
Can you talk about kind of what gave you the vision to have that vision to buy all of those, over the next couple of years and basically take them off from anybody else getting them?
That's our CEO. That's a credit to him. He's been working in aviation for over 40 years. He predicted the rise of the regional jets, which helped start Republic Airways. So he locked in the first Embraer order that turned into Republic, which is a multi-billion-dollar company. And he sort of saw the same dynamics evolving with narrow-body charter. And when he saw the specs of a 321 freighter, he understood the implications before everyone else. And so we've been ferociously trying to lock in both feedstock and conversion slots since early 2019, to the point where now we have 15 committed. If you are someone who wants to get in that business with that aircraft, the next available slot is probably 2025. And so we've actually had substantial operators kind of done the math, and they're like, "Hey, can we just dry lease your aircraft?" And we're like, "No, you can hire us because we're going to make money using it." So I think that foresight was big. And then also the other side he saw was the lease rates in the U.S. being too high. He had been involved for a long time. It was getting frothy, which was driving a lot of charter operators out of the business. Velo came from Express. There was a bunch of other charters that moved from charter to scheduled and left kind of a void where it was. And he saw that opportunity with planes getting cheaper to go into that space. Keeping in mind, because we certified ourselves as a 121 flag, if that dynamic changes, we can go into scheduled too. And so we have the flexibility with the way we structured this platform to really be responsive to whatever the market kind of brings our way.
Okay. I saw on LinkedIn recently, you guys have announced some electric plane orders. Can you tell us a little bit about that?
Yeah, so the Alice project, we have two. There's the eVTOLs from Embraer. We think, we have an option for 200 of them. They're coming. Whether it's going to be in 2 years or 6 years, that vehicle is coming. We partnered with Embraer, and so has some of the others. United and American have chosen that as their operator of choice. We could see up to 300 operating in just the South Florida area. It's very Jetson-like, but we are the only operator in South Florida who has an order for these. We're at the table with the government. We're negotiating. We wanted to be at the seat when they figure out how it's like inventing the taxi business from scratch, but in the sky. So we have a seat at the table. There's not really a big investment on our standpoint, but when this is created, we'll have the front row seat. The Alice project, which is, I think, sustainability and ESG investing, it matters. We think there will be electric aircraft. How long it takes to get to the big aircraft, we don't know. This aircraft is well advanced. It's having its certification flights with the FAA next week. Its operating costs are 1/8 of a similar gas-powered aircraft, which, given, again, our South Florida, it's got a good range. I think it's 600 to 800 miles. It allows to do 1-2 hour flights pretty much anywhere at a cost of 1/8. And again, because we have this 121 certification, we can just add the aircraft and go do it. So again, I kind of emphasize we've created a platform. The first tranche of the platform is 320 passenger, then it'll be cargo, and there is nothing to stop us from adding eVTOLs, electric aircraft, wide-body aircraft. That's why you almost never see these in the micro environment, because they're not micro companies. If you look at anyone else in the space, you look at their market caps, they all have Bs in them. And so that's, there's nothing really other than time and money to stop us from achieving that.
Yeah, and you mentioned like the valuation disconnect, between where you are, and I think partially that is because microcap investors aren't used to seeing a business like yours in combination with sort of the different listing that you have currently. And I think you addressed kind of the first half of that, which is slaying the business really well. The second half of that, is there plans to uplist, into the NASDAQ at some point in time in the next 12, 24 months?
Yeah. So, I think a lot of our stock price is a function of, and this isn't uncommon with microcap stocks. It's not necessarily tied to valuation. It's tied to who's your shareholder base, where are your shares listed, what's your active volume, and some of the things that will hold back kind of that big volume institutional money from which tends to really move the stock. We absolutely anticipate uplisting. That's where our home is. That's where everyone else in our space trades. We are, there's also timing. Today's not the greatest time. What we wanted to do was have a year track record of revenue growth. We wanted to demonstrate profitability, which we will. We wanted to demonstrate cargo being on board and the cargo growth we have in place, because that's something that gets kind of the bigger checks excited. I've had conversations where they say, well, you're only worth 35 million, so I can't invest in you. And I said, well, if you're worth 200 million, would you invest? They go, absolutely. Which to me is completely counterintuitive, but they have rules, right? And so I think there's a bridge, and that's investors like our retail we have, and the people who look at the space who anticipate, well, if this platform executes with what we're doing, what's to stop it from doing it? And I don't really think there is anything.
We had a couple more questions come in. Is there customer concentration on the freight side? And same question or a different question. Have you locked in conversion slots commensurate with aircraft? And is conversion capacity an issue?
Yeah. So on the concentration, so we have one contract in place for the first aircraft, and that's with Avianca. We're in conversations with 13 other operators for the additional aircraft. So we won't be a one customer at all. The plan is to have 5 to 6 customers, anything ranging from most of the operators in Latin America to Cunanego, which is a massive operator. So we will not have concentration. Yes, today because we have one aircraft, but in the future that'll be diverse. On the conversion, we do have the first 10 locked in with MSNs. We actually have the next 5 conversion slots, but we don't have the feedstock. So we have 15 of them effectively locked in. Conversion capacity is a massive issue. And not only is it a massive issue, it's a manpower issue doing the actual conversions. So, it's in so much as we've been pretty conservative with when our aircraft arrive, I feel for the person behind us. So, it's a pretty long line right now, and a lot of those planes have X's on them.
What happens when lease rates go up, after you get these next 15 or so? Do you see yourselves remaining to be competitive?
Yeah, I think lease rates, we don't really see lease rates going up for these older aircraft. There's 2 ways we can address it. We can continue to have older aircraft a mix with older and younger, which is what will classically happen in a normal market environment. What we'll do is we will evolve, like Sun Country did, into more scheduled service, where you can justify a more expensive aircraft. Because in order to take a new aircraft is going to cost you $400,000 a month, whereas our aircraft is going to cost you $100,000. To be economic with a new aircraft, you have to have a 300 to 400 hour schedule. Charter, you're targeting a 150-hour schedule, right? So when you look at the dollar per hour on the A of your cost structure, as aircraft get more expensive, we would move into schedule that we could do that. And by then, if you think about it, say that takes 3 to 4 years. By then, we've got scale. We have a history. We have an operating history. We have the ability to be flexible as that happens.
If these deliveries actually come in on schedule and you're able to, obviously utilize them, what's the size of the business, by the end of next year?
Well, if you just take those unit economics, you're looking in the, if you take, I guess am I supposed to do the math? If you just take the math of, if, for example, you had 10 cargo operators generating $500,000 in contribution margin and 10 passenger generating $200,000 in contribution margin, and the passengers covering your overhead, you could probably back into a number.
Yeah.
And that's on lease, and that's on an EBITDA basis. Now, most airlines are valued on an EBITDA basis, because if you own the aircraft, you don't have the rent expense, right? So you have to be really careful when you compare apples to apples. Our EBITDA in that scenario is probably 3 times higher than our EBITDA due to the fact we lease, which begs the question, it's probably a real opportunity when raising capital to buy aircraft just because of the way the valuation works. you.